Hello and welcome to Bunnex Investment Group. Today we are going to talk about a very simple strategy that will utilize one of the price action concepts, which is supply and demand zones. But before we jump into the whole video, be sure to check out our free signals Telegram channel. The link is right in the description below. So first things first, Forex is a game of patience and a lot of discipline. As I say always, it is a machine that was designed to take money from the impatient, giving to those who are patient. So, for you to make money, you have to have your emotions on check every time. So, our today's strategy is very simple. It will not work on all, actually, it will not work always, because I've heard several comments that this strategy is not working every time. There is no strategy under the sun that works every time. You have to wait for all the parameters of that strategy to align for you to take a trade. So as a wise trader, you do not depend on one strategy. You should have an assegai of strategies so that you be able to get trading opportunity oftenly. So the first thing to do on this strategy is to go on the daily time frame. The daily time frame is a powerful time frame because it tells us the most important or the most powerful reversal zones. So the first thing is to look for the nearest or the first reversal point in the market. The first point is to go on the daily time frame, look for the nearest reversal point. I am going to illustrate using historical data, and we are going to assume the flow before the moves. So in market maker concept, we will be saying this one is the peak, level 1 complete, then level 2 initiated here, so we are going to be issued another level going up. So but however, this might be difficult to other people. Counting of levels is not easy. It takes a lot of time for you to fully understand. So instead of counting levels, you just go on the daily time frame, mark the nearest turning point. In this scenario, before this move actually happened, our nearest turning point was this one. This was our nearest turning point. Of course, this was our nearest turning point, but it is going to be cancelled with the fact that I'm about to reveal. The most important thing is to look for a setup in the demand or supply zone of the daily time frame. In this scenario, this was actually a demand or supply zone in the daily time frame. So as you can see, we broke this structure, or we passed this level of supply. Therefore, our nearest reversal zone on the daily time frame became this one. So after drawing these demand and supply zones, the only setup that we will look for is the multi-session W or the multi-session M, depending on your market context. This is how a multi-session W looks. It means this leg is in a different session to that one. It may also mean that this leg is on a different day to this one. And this may be Monday, this may be Tuesday, Wednesday, Thursday, or Friday. So after drawing these zones, we'll go to H1 time frame to look for the setups that I'm talking about. Let's go back into history. Right, as you can see, this is our zone that we've drawn on the daily time frame. What can you see? You see that the first leg was on this day, then the second legs were on this day, giving us a perfect setup that we are looking for. We're going to enter after candle closure below the 13 EMA, which was going to be this one or this one or this one. You get your preferred number of pips from that point. So as you can see that the previous demand zone from the daily time frame that we drew on the daily time frame provided us another zone to expect market reversal. As you can see, we had the first leg in this session and the second leg on another session, and it gave us a beautiful flow. So let's go back on the daily time frame and look for another zone. We've said the first thing is to look for the nearest point, right? In this scenario, we're definitely going to this was another zone of interest. Why? Because we had supply zone here. This pin and that pin was definitely going to give us another point of interest in the market. Let's check for the setup if it occurred. Right, there it is, a beautiful M. It was actually shrinked, but it was an M that we are talking about, and it was definitely going to give us a flow. Right, as you can see, we had another demand zone here that we draw using this one, but this one had not yet occurred. So we are looking for a setup within this point. Going on H1, as you can see, we had a beautiful W here and a flow. However, the market maker repeated that same point, taking off stop losses, and if you were taking out on entry or at break even, you were definitely going to re-enter on this point. So basically, that is what you'll be looking for. The first thing is to go on the daily time frame, draw all the support and resistances, or draw all the supply and demand zones. After drawing those supply and demand zones, make sure you monitor the chart as it enters those zones and look for the setups that we have talked about. After looking for those setups, simply wait for candle closure below the 13 EMA and take your trade without fear. However, I'm not implying that this is 100% Forex strategy. Trading is all about probabilities. This strategy will give you a higher chance, actually 85 to 90% chances of getting all your trades correct. So do not take it as a 100% strategy, because if you have that mentality or if you adopt that mindset, you will definitely lose your risk management. So go in history, backtest, and see how it performs on your side. And if you love the performance, feel free to incorporate it into your strategy portfolio. Thank you for watching. Let's meet on another one.